What a boring week in the market. There are some global, more macro reasons of why market volatility has really drawn down. Mostly in the year of December, the larger hedge funds, the fund managers, the larger institutions, if they have had a good year and the S&P is up about 16% so far this year, they're not going to put on a lot of risk right now. There's no need to go ruining a good percentage. There's no need to risk losing their bonuses. And then also, if you are down on the year, you're probably not going to make it back by the end of this anyway. So it's a form of risk management. Anyway, so we have that backdrop. We do have the backdrop of a potential Christmas rally coming on this year. That is specifically the last 5 trading days of the year. And I believe that starts on the 24th. So the day before Christmas. It's typically low volatility anyways. However, some interesting stats. I was watching a video and it was saying that 80% of the time there is a Christmas rally. However, the other 20% of the time that there is not a Christmas rally, the following year tends to be bearish. So with that being said, we kind of need to pay attention to whether there's a Christmas rally or not. If there is, okay, great, business as usual. If there is not a Christmas rally, then we might need to be on our toes for the next year for bearishness. But that's just straight stats. And based off of history. So there's that for you. All right, let's get into the charts. Last week, what I was looking for actually was a little bit of a deeper price correction, maybe to the 50 EMA. You can see I left this here. I was looking for a reverse head and shoulder versus this neckline of 6860-ish, 6870-ish. For it to pull back, set a higher low here. I was looking for a tag of the anchor VWAP, it was down here at that point in time. So that's what that is. That obviously didn't happen. We got a time correction. You know what they say about time correcting markets? They tend to be stronger markets versus price correcting markets. Either way, with as boring as this market was this week, it was rather constructive. I am still looking for some sort of pullback. For me personally, I want it. I took a trade on Apple on like Monday, and I closed out on Wednesday for a nice profit. And then I just sat in my hands for Wednesday, Thursday, and Friday because we are at a potential area of supply as where it was last time. So I'm not interested in putting on risk after like a 7.5% move into five and a quarter percent move into prior resistance. That's just not good risk management in my opinion. So what I am still looking for is a pullback to reset in some of the larger names that I'm going to go over so I can reload basically and take another shot. However, the nice thing is looking at the RSP is that this overall market is still strong, right? This is the equally weighted S&P 500. We hit all-time highs this week, literally, 192.81. So congratulations to bulls and the general market, which is great, right? However, bigger picture, it's still chopping around. It's not doing anything. So we did not close at all-time highs, but we did hit all-time highs. This could easily be a failed breakout when we get a pullback. But looking at the short-term MAs, even the 50 and the 200, they're still inclining, right? We just use these as direction. Now it could fail here and we can get some more indecision motion here. We do have a higher low and we do have a higher high as all-time highs were printed. So this is interesting. If we do get a pullback, I have an anchor VWAP from this November 20th low. Maybe we get down to here to set a higher high versus this. At that point, though, we would technically get a lower low. So maybe we would chop around. Either way, it looks pretty decent. Not that bad. NDX, Nasdaq 100, cash index. Same thing. I was looking to see if the market had some potential supply in this area. As you can see, we still have a gap here. It kind of ate into that gap today and found some supply. A little bit of a topping tail today, but I am still looking for a pullback. I do have an anchor VWAP from this low Also anchor VWAP from the highs. So the average participant, even from the all-time highs here, they are above water. So the pressure is on the shorts right now. So when I say this market is constructive, it's above the anchor VWAP from this all-time high. Looking at the short-term MAs, they're pointing up. Long-term MAs are pointing up. We had a very strong bounce, and that bounce held. It broke this prior area of supply, even retested it and held it, and it's time corrected. So this is overall a constructive market. That does not mean it cannot or will not pull back. But I would anticipate it to maybe pull back to this area of interest of this anchor VWAP to set a higher low, and then we look for an entry level to execute on, basically whatever execution system that you guys use. Looking at the equally weighted QQQs, you can see downtrend line broke. I had this on last week. Again, here is my question mark of a reverse head and shoulders. That would be the neckline there. We kind of broke the neckline already. So pretty strong market. We're only now 1.3% away from all-time highs when we are just 7, 8, 9% away from all-time highs just from November 20th, 2 weeks ago. So pretty strong. All right, moving on to IWM, the Russell 2000 ETF. We can see that we are hitting a prior area of supply basically at all-time highs, 0.8% away. Short-term MAs trending upwards. If we want to set an anchor VWAP here, I already did. That area of interest, if we get a pullback, is around 241. So I would keep an eye out for that. Moving on to some other interesting sectors. XLB, I do think this is interesting for a potential reversal, for a trend reversal play. Why? Here's a double bottom, potential double bottom. I don't think it's confirmed just yet, but it has a decent chance to confirm. So double bottom here, here's that neckline. It's basically at that neckline area. It needs to hold this and then make a higher high to confirm this, but it is over the EMAs. Even though they're not trending upwards, they are starting to show some indecision, and ideally we get a little bit of trend upwards. So XLB, the materials, they look pretty interesting. Here are some names. They were top 3 last time I looked. It could have, the weighting could have changed at that point in time, but XLB looks decent, or for a trend change, that is. XLC, this bounced on Thursday, obviously, and for sure today. Why? Because Meta is actually moving. Netflix continues to get crushed. It looks not good. We'll go over that shortly, but Google continues to be strong. So now that Meta is moving, it's a heavyweight into an XLC specifically. It's helping pull this back up. It congested, time corrected, let the short-term EMA catch on up, broke the, let's just call it this 115.50 area, and off to the races it went. So it hit this prior area of supply, and obviously, we have a short hopping tail, but this is not a weak bar by any means. So I would keep your eye on XLC as well, or the names in there, because it's pretty strong. Of course, per usual, we have to look at tech because it's such a large portion of the S&P 500 and the Qs. Downtrend line broken, and it's just been slowly grinding up. This has been more of a mover this week, 2.5% versus the SPX, or even if you want to look at the NDX, it was up 1% versus, what was it, 0.3%. So, which is expected, right? Tech is typically a little bit more volatile. I do have an anchor VWAP at this low here. The average participant from the highs are also above water, so the pressures are on the shorts here. I would still look for a pullback, maybe to, I'd say, this 143 to 140-ish area, to set a higher low versus this low. But overall, this is constructive action in my opinion. So I was saying, hey, don't catch a falling knife. This has potential to go lower 2-3 weeks ago or so. My thesis is now changing specifically because of this week's look. Utilities, this was looking good. Had a nice channel, broke it, tried to push out, but look at that. It failed pretty bad. So utilities is not looking ideal. This could obviously fail the breakdown and create a little bear trap and then come back up. Maybe something like this here, set a higher low, then come back above that range. That could obviously happen. However, what can also happen is continuation to the downside. So this area here, this 42 area, that is also confluence with the 200 EMA. That's a potential area that XLU. So XLU might continue to get a little pullback. So if you're looking for short specifically, this has a potential to be of interest. XLV, again, continuing to stay strong. There's absolutely nothing wrong with this right here. It's still above the 21 EMA. It's kind of moving back into this consolidation area. If it breaks this 151, let's call it, it's probably going to tag the 50, maybe even retest this again. And if that happens, we will revisit. But as of right now, as long as it holds this 150 to 151 area, it looks healthy. Maybe it just bases around here and then curls back on up. You could also put an anchor VWAP from the high here to give you an idea when the average participant is above water or is green since the high, okay? And then let's move on to, we'll go IBIT first. This is basically just the ETF that tracks Bitcoin. You can see downtrending. We do have a death cross technically, if you care about that stuff. These are EMAs. Everything is downtrending. This is not, doesn't look the best, right? Here you go. Here's actual Bitcoin. You can draw a simple downtrend line. Lower highs and lower lows are still being made. Now, I did put an anchor VWAP at this low here. It continues to get tagged and hold it. I mean, it even undercut it, and we had a strong move off of that. So I would watch for this to hold. However, the 50 EMA, it's still, I mean, it's falling pretty sharply, actually. Indecision on the short term, I would not. I still think you're trying to catch a falling knife here. This could end up being a bear flag if you want to look at it like that. And if that breaks down, then we could even potentially go even lower to, I mean, heck, we might even get to 75, somewhere around there. So just be mindful of Bitcoin trying to catch a falling knife. I think this needs to consolidate. Eventually it turns back up. Long term, you're fine. But if you're trading this stuff, I would not, I wouldn't be, I think you're catching a falling knife. All right, let's move on to the heavyweights. Microsoft still doesn't look the best. It's not really on my radar to trade. It's below this potential area of supply. It did retest it. However, it is setting a higher low so far versus this. It did undercut the anchor VWAP from this low, so it's just kind of chopping around. It's it's nothing in particular. It's nothing special. Let's go over NVIDIA again. Nothing special. Kind of pinging in between anchor VWAPs. Indecision on the short-term EMAs. It's kind of a waste of time. Apple is not a waste of time. I learned that there's actually some pretty important news, especially with the higher ups in Apple. Number one, the AI chief, John Giandria. There was an announcement of him stepping down this past Monday. And then also the head of UI design, Alan Dye, he is moving over to Meta, and a good amount of his team is also moving over to Meta. The policy chief, Lisa Jackson, she is retiring in late January 2026. The head of general counsel, Kate Adams, she is also retiring in late 2026. And then there have been rumors of Tim Cook potentially leaving Apple in 2026. There were rumors about him leaving earlier in 2026, such as before March 31st, 2026. And on Polymarkets, if you pay attention to that stuff, that's actually up to like 18% the last time I looked. So either way, why am I saying this? Apple has some potential headwinds coming up, even though it looks pretty darn good. The obvious trend is up. I don't have a trend line on here, but I can draw one for you real quick. Let's just make it nice and easy. Tag it, tag it, tag it, make it 1, 2, 3. That's a trend, right? You can see the short-term MAs are up, the long-term, the moderate term, 50, 200, those are up. The indicators that we use in our trading room, they are strong. So Apple continues to be strong. I am still looking to long Apple, just because we might have some headwinds up for Apple with all this news It doesn't necessarily mean it's going to trade poorly. So I am basically looking for a retest of this area, and then maybe we continue on higher. Chances are there. Otherwise, it could continue on down. Amazon, it's nothing in particular, kind of just chopping around in this zone. I wouldn't waste your time on it. AVGO, this is actually pretty decent. We had this failed breakout here, tag gaps at end range. Now we have another new all-time high created, pulled back, retested this chop zone, and now it is pushing away. We had a nice bottoming tail here on that day. I missed it straight up, which is fine, not that big of a deal. But moving into this next week, I do think AVGO, Broadcom, is somewhere you can pay attention to, but it's not necessarily top of the list. Meta, this had pretty big news. Zuckerberg, he is cutting about 30% his metaverse division. So it popped on that on Thursday. We have a nice inside day on Friday. We have a gap below. Time correction here to the short-term MAs. It closed above the 200 and the 50 EMA. So this is constructive. We have a large earnings gap here. If you see, I have prior areas of supply. It's coming into a potential supply of area. Here's another potential area. So this can go either way, in my opinion. I think this has a potential to get an earnings gap fill. I don't know necessarily next week, but that could be the trade that is coming up. Yet at the same time, it is coming up to areas of potential supply. So I wouldn't be shocked if we get a gap fill here, maybe even retest this prior chop zone, and I don't know, maybe some confluence with the anchor VWAP from this low to set a higher low in this area, and then we get the gap fill. So it's not on top of my list. It is on watch, but I'm probably just going to watch it next week. Netflix, if you like shorts, again, last week I said, hey, Netflix might be a short. It's coming into the 20 EMA, and here it is. I didn't take any action on it because I simply did it. I was actually maxed out on Apple, so I didn't have any more risk to give. But Netflix continues to be a good looking short. This is hitting this prior area, this breakout area that was resistance. It never even retested it, right? So it's retesting it now to see if resistance can flip into support. However, if that fails, more downside potential is $82, right? Tesla looks good. I miss this entire move. I'm perfectly fine with it. It's really just chopping around in range. It is a potential for a breakout next week. However, look how far it's come from these lows. It's not on top of my list. It's kind of like, hey, I'm watching it. If the risk is there, yeah, 20% within, since the 21st, within 2 weeks or so, 2 trading weeks, 10 days, 11 days. I would prefer a pullback, right? I've been saying this. I would prefer a pullback for basically everything, except Google. Google, I take an entry on. I didn't enter Google today because I didn't want to risk over the weekend. Google looks great, trending upwards, nice little kind of rounding, short-term rounding here. I would watch this area, this 322 area. It's probably over anchored VWAP from the high already. Yes, it is. It's close over it, right? And so Google is also with the indicators that we use in our trading group. It is also very strong. It's top tier at the moment. It continues to be strong. There's a lot of AI news coming out with it. The value of Google is being predicted to be very valuable, especially with AI. They have a nicely structured AI plan for the future. So Google is probably going to stay in play. CrowdStrike, I was saying, hey, this might be decent. I like this large bar here on volume, basically on earnings, but it's really just been chopping around. I still think this probably heads higher, but it might need more time. So not on top of the list, just something interesting to watch, I suppose. Let's go to now. Now, it's a waste of time. I wouldn't long this. I still think we have a potential to get this gap filled on here. Obviously, it didn't happen over the last couple of weeks, but either way, PLTR, this has now transitioned to be bullish on our indicators that we use. So this is now on my trading list. However, it's right by this prior area of supply. So I will not initiate a new trade up here. Again, I would prefer a pullback, maybe to this anchor VWAP area, maybe to this 170 area, but it's got to hold above these short-term EMAs. which we are getting a 8 and 21 cross. If you pay attention in that stuff, it is over the 50 EMA, and then the 200 is still inclining. So this still looks okay. This is just a big old base. And if we want to get a breakout, I certainly want to be involved in this name because it's a volatile name and it moves when it breaks out. When it moves, it moves. Otherwise, you can see it's just been basing. Hood, I missed this entire thing. I was looking for a little bit of a deeper pullback than on Monday. So I missed this nice move, which I'm perfectly fine with. But again, I am looking for a pullback for an entry, maybe to this anchor review app 122 area. It's got to hold these short-term EMAs. We have an 8 and 21 cross here, even at the 50. The only thing is for risk to be worth it, it's got to be far enough away from this prior area of supply. So maybe we get a pullback and like a down trend line retest. I lied. I would not like that. That would be too deep. I would watch this 120 area, 121 to 122. Well, let's just call it one. Yeah, let's call it 120s, somewhere around there, for a higher low to be set here. And I would certainly be looking for an entry on that. All right. So again, looking review real quick. Top looks for this week. Number 1, Apple. Okay, that's choice. Number 2, Google. And number 3, I'll go Palantir. Okay. Palantir begins my tier 2. So tier 1, like indicators and limited resistance above, are Apple and Google. Tier 2 are going to be Palantir. I'm going to say Hood. It's got to be far enough away for risk management. Then I'm going to say Broadcom. Broadcom looks decent. It's shaping up. It doesn't have a lot of supply above. It has potential here, right? However, the indicators just don't fully support it just yet, but it is very close. And then lastly, Meta. I'm just tossing it in there for a potential gap fill or potential higher low to set up for a future gap fill. I don't know, maybe in 2 or 3 weeks. We shall see. All right. Trade well. Do your homework. Hopefully this is valuable for you guys. Like, share, subscribe, leave comments, leave your thoughts. I always want to connect. I think having a professional and a supportive trading community is extremely important. So if you guys want to be part of it, like, subscribe, and maybe join us. All right, later. Trade well.